With relatively high yields, a stable currency outlook, and a macro backdrop supported by moderating inflation and resilient domestic demand, the case for strategic allocation to India fixed income remains as strong as ever. In a global investment environment marked by volatile markets, tariff uncertainties, economic growth concerns, and geopolitical tensions, resilient emerging markets like India provide an important source of diversification for core fixed income allocations. HSBC Asset Management provides global investors the opportunity to access the large and relatively uncorrelated emerging market through a disciplined, research-led approach. Our India fixed income strategy uses 5 building blocks to dynamically generate alpha. First, we are constructive on Indian government bonds. With the likelihood of a supportive monetary policy stance in near term, we have a long duration bias in this segment. Second, our allocation to state government bonds is managed dynamically, depending on the spreads and expected issuance over and above the sovereign supply. Currently, we are underweight given the rich spreads. Third, we see INR-dominated local corporate bonds as offering spread over government securities. They are also backed by strong credit quality, improving domestic banking system liquidity, and slow credit offtake. Fourth, we maintain a selective exposure in offshore US bonds of Indian issuers to benefit from elevated US Treasury yields. This dual approach to INR and USD bonds allow us to capture relative value and arbitrage opportunities between the onshore and offshore market. Finally, we have increased the weight in INR-denominated supranational bonds as they offer reasonable yields and strong credit profile, providing a way to broaden portfolio diversification while maintaining liquidity and stability. At HSBC Asset Management, we combine our deep on-the-ground expertise in India with a rigorous global credit selection framework, enabling us to identify and capture the most compelling risk-adjusted outcomes for our clients.